So today we're going to cover fixed asset, but technically what I wanted to do is to do portions of the fixed asset transactions, considering we have done already a basic full length of fixed asset tutorial last year, and this is already available in our YouTube channel. So here, we've done already a fixed asset introduction about Xero. I've done an exhaustive fixed asset tutorial as well. So this is a 31-minute video. So what I would want to achieve today is basically just do a rundown of these basic things and then dwell more on limitation, causes of errors, and then tips. And then I would like to make note that there is one particular very advanced fixed asset discussion or tutorial about fixed asset importation challenges. So I'll just go a rundown of all this very basic information. So let's start with access. Fixed asset is available in all types of Xero subscriptions. This module can be found at your accounting menu, okay? So you must be an advisor or a standard user to be able to access this module. Number 2, account setup. So when you are going to set up chart of accounts for fixed asset, it's important that you have to select the specific account type to fixed asset. Because if you are not, any recording to this account that is not a fixed asset type would not be added in your fixed asset register, okay? So in our example here, under asset class, we would be able to see asset accounts. So you see here, now you have to set up the chart of account, the main fixed asset account, and then the contra account, which is accumulated depreciation. Both of them must be classified and set up as a fixed asset type. Because if you're using a current asset account, then that would create issues because it will not register in your fixed asset register. That's a common mistake which we will discuss later. Now, next, fixed asset dashboard. The fixed asset dashboard, again, like I said, you can access this under accounting menu, and then at the bottom of the drop-down, it will bring you to the fixed asset dashboard. The fixed asset dashboard, basically, you have these buttons. The new asset, when you are manually registering, the run depreciation, which you do after you are confirming that your fixed asset register and then your fixed asset ledger in your trial balance matches. And then these are the buttons for importing, exporting when, for example, you are adding manually assets in Xero in the fixed asset register, or if you are, for example, converting from another system to a new system, and then you have conflicts between conversion date, organization financial year, okay, and then fixed asset date. This is where you will have that button here when you are importing long list of old undisposed, for example, asset because you are converting. And then you have settings also where you set up your asset types. Next is fixed asset setting. Okay, let's dwell on that. So the fixed asset settings, like I said earlier, when you're setting up, one of the first things you need to do before starting running your depreciation is setting up your chart of account. The next step would always be setting up your asset type. So what is the difference between asset type from the chart of accounts? The chart of account is basically a ledger-based, where you find it in your trial balance in your financial reporting. So it's in your ledger. Asset type, this is asset type allows you to organize sub-assets under major fixed asset class. So for example, we're talking about equipment. Equipment in the chart of account, it's very generic, okay? So let me open that. So here, for example, office equipment. Now, office equipment could be many things, or some companies would have equipment only. But under equipment, you have a lot of equipment under this main class. So this is where you use the asset type, either computer equipment or office equipment, or let's say pantry equipment, for example, or kitchen equipment. So all this under a major fixed asset account type. And then you are subcategorizing this. And one advantage of doing this is because it's possible each asset type would have different depreciation policy. right? So maybe your computer would only be 2 years, but then your office equipment would run for 5 years. So this is the best way to split different depreciation policies. So if you think you have different depreciation policy for each fixed asset type, use a asset type categorization without necessarily adding all this in detail in your chart of accounts. Okay, so that's one of those advantages. And how you do it is basically just create an asset type. I would say kitchen, and then I'll just select what type of chart of account, the main account, and then the contra account, and then what is your depreciation account. And then we set up the policy for this particular type. So maybe you use a straight line method, and then are you doing average method on actual days or full month? So normally it's actual days, and then you select maybe 25% per year, or you would say 4 years. Or if you're saying 2 years, so that would be 50 here, or you would say 2 years, right? So every time you use the asset type, when you're registering a new asset type, automatically this policy will apply in this particular asset item. So creation of fixed asset purchase. Now, how do we record asset purchase in the ledger? It's the same way how we record our expenditures. So it's either we do a bill method, the first method, fill up everything, all the information here, and then all you need to do is just use the asset account, which is, let's say, equipment, right? That's it, and you put the appropriate tax. Another method would be spend money method. Again, when you're recording an asset, make sure that you are choosing the fixed asset account. Okay, if you are not, it is a common mistake, your fixed asset module would not detect this entry in your fixed asset register, and it will not create a draft. Okay, the third method would be manual journal. Again, you would use that fixed equipment, and then of course it should be a debit entry. Okay, and then of course the last one would be the expense claim method. And then if you're doing this, make sure the asset account is enabled. No? Here, you should be able to tick this enable payments or show in the expense claim so that it will show in your expense claim, right? That. So then it will record to your fixed asset. So now, well, basically, the start of all your fixed asset process in Xero would always start in your data entry in the ledger. And that is the best practice. So like I said, bill, manual journal, spend money, and expense claim. Once you have recorded that, all these entries will go now to your fixed asset dashboard as a draft. So the next step would be, the best practice is every time you record posting a fixed asset entry, immediately without delay, so that you'll never forget, you go to your fixed asset dashboard and then register the asset. Okay, so this particular entry are drafts. These are coming from a particular ledger entry, right? So this, I think this is a manual entry because I don't see any blue link here from an entry in the ledger. This one, let's see, there is also no link. So when I see a fresh draft fixed asset, and then I don't see something here like I wanted to show you. So a typical registration that's coming from an original posting. So what I will do, I'll create a new example. SM appliance. And then let's say I'm buying this now, September 4, 1, 2, 3, 4, 5. And then let's say a microwave. This is one quantity. I'm buying this for 2,500. This is dollar, by the way. So let's say I'll use, this is $50. And then I'll use office equipment, right? And then let's say I have no VAT on this. Okay. So take note, I'm entering and posting the first time the entry as an office equipment. So what I would do very quickly is just go immediately, check my fixed asset register. I should be able to see that item here. Okay. And then when I'm trying to register, before I do, and this is a tip later, before I start registering this, because sometimes it's possible that you have another person who's going to do a fixed asset registration, and then you have a different person who's posting. So let's say I have an associate who's doing the posting of the journals of the purchases. And then I would be maybe a senior accountant in charge of registering the fixed asset because my responsibility is focused only on fixed assets. Now, when I'm about to do a registration, I do a very quick diligence here. I'll click the item. I don't necessarily go and set up here. I need to see this particular, this is very important. Because once I see this, then I know this entry is coming from our original posting. Why is this important? This will assure us that once I register this item is reconciled in my ledger, meaning there's a previous posting. So when I click this, okay, I would see this in my ledger here. And then when I do an accounts transaction, so here there's a valid entry, and then I would see that in my ledger. So here I have posted this. So now I'm confident that what I'm registering is actually posted in the ledger. Now, this is something that everybody must bear in mind. You never register an item that is not in your ledger. Otherwise, you'll have a problem in your fixed asset reconciliation, and then you are running a wrong depreciation value. That's the effect. So this here is very important. Now, here, for example, when I'm trying to register this laptop here and I don't see the bill, this would tell me that this was created manually. And then I have to be very careful. I need to investigate this. So what I would do, I would go to office equipment and run this if I see this laptop. What was this date? This is September 4th, right? So there's no entry here, then I don't need to register that, okay? So I need to be very careful. Now, let's just go proceed on how you're registering that. So of course, your purchase date, the amount, you put the warranty, serial number. Then this is where the asset type will be very helpful. So if this is a microwave, then I would say I can create an asset here, and I would say this is pantry equipment. And then I use the same account. Okay, so here I can build my asset type from my registration. I'll do a straight line. I'll do all day, and I'll say we'll depreciate this in 3 years, right? So now that is already added in your selection. You can add details of that asset. And then what I would do, I simply copy this because I am all day, right? So you're counting for each day. Then you start on your purchase date, then register, done. It's added in your register already, right? So now it's part here. Now, these things, when I look at here, I do my quick diligence and say, because experience will tell me already this. If you're new to fixed asset, it will take a lot of time for you to figure out, this item is not. So the tip is that, there is no view bill here. Then I need to go to my chart of account. Under furniture, I have furniture here. See, there's even no furniture account. So then I don't need to register this. Why I don't need to register this? Because I will never register a fixed asset that is not in my ledger. Take note, the posting must precede before the registration. Okay, if there is no posting of the fixed asset, then there is no point of registering. So that's why it's very dangerous and I do not really recommend manually registering the asset. Okay, just take note of that so that you don't have no issues on your fixed asset reconciliation. Now, move on. Monthly depreciation is where here you just click this button. In Xero, it is very automated. Okay, so we are depreciating this the first time here. I can jump right through here. And then assuming I've depreciated previous months already, then I can just continue every end of the month. Now, note, do not click this button until you have done your fixed asset reconciliation. Again, never run a depreciation until you completed your fixed asset reconciliation, because you should do first fixed asset reconciliation so that you'd be able to fix first issues and unreconciled items, and then both must be matching your ledger and your asset registration, and then you can run a depreciation so that you do not need to do rollback depreciation. Now, depreciation rollback here is one of the tool in fixed asset when, for example, you realize now it's September. Then you realize early in February, your team has forgot to input or post a certain account. Okay, assuming your books is still open and you're not closing until the year end, so everything is open for the entire year, and your year end will end on December 31. So in your case, for example, you realize now it's September, but my team committed omission of not inputting one particular asset in February 25, okay? And then your team decided, okay, let's just book it, predate it on February 25. Now, since you are already running a depreciation on September or October, you will only calculate the depreciation only on this period. So your solution would be you need to roll back to that particular date in February, okay? So that whatever you have registered because of that error will be included in the list, and then confirm, okay? And then you keep doing that in March, okay? Now here, there's nothing in between this date, so then I'll just jump to September. Okay, so now I have updated my depreciation, including the newly posted in February 25. Okay, moving on. Fixed asset reconciliation. This is very important. And always I emphasize this in LiveSync. This is one particular process in the month end and in our working paper that must be present before we submit the management report. Now, this is what you call housekeeping process, basically. You have to go in your reports. You will have to go here at the bottom. You have depreciation and fixed asset reconciliation. I usually do the all fixed asset reconciliation. So here, I would always do this first before I will run a depreciation button you see earlier. Before I click that, I look at here first. Why? Because this will tell me if there are mistakes, okay? So how would I know that there's mistakes? Now, as an absolute rule, your balance sheet amount must be the same as your register amount, okay? Why is that? Because the register must be based on ledger posting. What does it mean? Meaning this transaction has already been recorded in the ledger before you are recorded in the asset. So if you look at this error, it's very obvious here that you have more assets recorded in your register than the asset recorded in the balance sheet. So how would I check that? I would just simply go here in the balance sheet, which brings me to the balance sheet, and then I'll just click particularly the office equipment, right? And then what I will do with the office equipment, I'll run as far as I can go on the date so that I'll see all the list. So I'm doing computer equipment. So I go to the ledger and I see all the asset that has been. So here so far, there are only 2 assets that's been recorded here under computer. But your asset register will open that report. It brings us the depreciation schedule. And then you would notice the computer equipment registers only 1 line compared to your balance sheet. So which is which, right? So F003 computer equipment. So I'd rather want to look at this here, Oliver and Tracy. So this is LCD. So see, I don't see LCD in my computer equipment. And then your fixed asset, okay, there's no link here. This means that this was just registered manually. Okay, so what happened here is that there is a mismatch. So how would I fix this? I would fix this by making sure these items in my ledger must be registered. Okay, so then I go to my asset register. So Oliver and Tracy, let me see if they're Oliver and Tracy. So Tracy is here. I'll open Tracy. So Tracy is 1969.99. Okay, so then I can go ahead and register this, click it here. But I want to make sure that the date is also correct. The date here is August 29. So be careful on that as well. So I'll do August 29 and I'd run this August 29. So now I register. Now I will update my depreciation schedule now. Now I have Tracy, the same here with my ledger Tracy, but I don't have Oliver, okay? So maybe I need to record Oliver as well by doing a new asset register. And then what did I see here? Oliver is 14 July. So 14 July. What is the purchase price? So here I'm just playing the game of matching, and then laptop would be computer equipment, and automatically it copies here, register. I update my ledger, it's still the same, obviously, and then I update here. Now, all this item that is not in my register, I have registered, but there is this one item that is not in my ledger, so what I would do, I would need to delete that. Now, take note, I have recorded a prior date, which is August and July 14. So I need a rollback on this later. So this is the item, LCD. What I will do, I will delete this. Okay, go back to my depreciation schedule. It's already updated. So then I go to my asset register. Okay, I just refresh this. Go to my fixed asset. And then I'll do the same thing here. Okay, I will not do any more here, no? The office equipment. So I'll just illustrate the computer equipment. Assuming you fix also the computer equipment, right? Now, since I've done a prior period, I need to roll back on July. I'll start all over in July. See, July is there recording already our computer equipment for the one of the laptops. So I'll confirm here and then run again my August. And then I'll run my September. Done. Then I'll go back again. So before clicking the run depreciation or rollback, you have to check fixed asset reconciliation. And after doing the running the depreciation, you have to check again the fixed asset reconciliation. So now it's a match. Your ledger and your register is matching. So this is an important housekeeping that you need to do before finalizing the balance sheet account of fixed asset. Now I'll just keep on the office equipment and just follow the logic what I did here earlier in the computer equipment. Now let's just move on. And then finally the reports. No? So in fixed asset, we've seen already the fixed asset depreciation report, and then we've seen already the depreciation schedule. So all these reports are coming from here in your reports, main reports, and you would see this here below the fixed asset. So there are more reports here, basically just the new reports. You have a disposal schedule also included that as well in that report. So now we can consider this as a depreciation lapsing schedule. So if your auditor would ask for a depreciation lapsing schedule, this is the case, and then your auditor would also ask for fixed asset register, give them this fixed asset register. Your fixed asset register is basically also your depreciation schedule, where you see the opening balance, the accumulated depreciation, and book value to balance sheet date is also showing up here. Okay, now I would want to continue with the limitations. Asset is registered only by first entering a purchase bill, expense claim, spend money, manual journal. So I've discussed this already. If you're not doing this, you're running risk of error in your depreciation and accumulated depreciation recording. Because while your main fixed asset account is dependent on your ledger entry, the posting bill, expense claim, spend money, manual journal, your accumulated depreciation and depreciation expense is calculated based on your fixed asset register. So if your fixed asset register do not match with your main ledger account of the fixed asset in the ledger of that fixed asset account, and then your fixed asset register is wrong and does not match, then your accumulated depreciation and the depreciation expense calculation will always be wrong. Okay, that's why you need to do a fixed asset reconciliation. Second, fixed asset account must be set up as fixed asset type. Now, when you want to use a fixed asset module, you make sure you set up your fixed asset account as a fixed asset type. Otherwise, Xero will not detect this as part of your fixed asset registration. Advisor and standard. And then requirement for to do a fixed asset reconciliation, I would add before and after running depreciation button. Always. Okay? You have to do it twice, before running and after running. Why? Because you want to make sure that before running the depreciation button, your reconciliation will be zero. Everything will match. And then when you run a depreciation, the same would also be zero and matched, and it will not change. Limitation, rollback of depreciation is limited by lack dates. No? So while you can do rollback depreciation, you cannot roll back if on a dates which are lack dates. So for example, you've already closed your book last year and you lack date it, and then you've missed something not recorded on the previous year, and then you try to roll back, you cannot do that. Why? Because it's already lacked. And of course, good practice would tell us that if it's closed book, maybe it was already audited, and then you don't need to correct that, unless of course you would do a prior period adjustment. I do not recommend that here because it creates another issue. What you want to do would be just record that. Our advice is record that on the nearest opening period or months or date of the new current year. Otherwise, you do a prior period adjustment. 6 is conversion. Fixed asset balance must be set up at the beginning. Okay, so this is part of those challenges in the conversion. So if you are going to convert moving from one old system to a new system, example, you're using QuickBooks in the past, then you're moving to Xero, and then good if you're doing a full migration, okay? Meaning the 100% of your old data is moved by using a QuickBooks conversion tool, you move everything to Xero. But if if you're doing the easy way, which I always do, I do the conversion method, wherein I leave all close and finalized data in an old system. I just take out the trial balances and then set it up as a conversion or opening balances in Xero. So when I do that, I need to set up also properly my fixed asset start date. That should match with my conversion date or should match with my financial year. Okay, so take note, in terms of fixed asset, this is where it becomes complicated. You have 3 dates to consider when converting. One is your organization financial year. So let's say you're doing April 1 to May 31, right? April 1 of the current, and then the following May 31. And then you have what you call a conversion date. So maybe you're converting in the middle of August. So you're way in the middle of your financial year. So here's the question. What would be my fixed asset date? So there are 2 approaches that you need to do. You either match it with your opening date and do many adjustments in between, or you would just follow the conversion date and make sure you posted at the opening balances all your accumulated depreciation that would result only your book value at the date of conversion. But again, that is whole challenge. I would say that is the super advance of fixed asset, that it would take us a lot of time. But yes, there is that limitation because we're talking about different dates here. And now let's talk about different errors. When you are submitting of course, you're an accountant, you finalize your book, assuming, right? And you've been finalizing your books the first time in Xero, and because you used a previous system, and then when you realize, why is my fixed asset balance is wrong, and when you look at it, does not match with your register. Okay, so these errors here that I enumerated could be one of them. Right? So the first one is the fixed asset account are not set up as fixed asset account. So maybe when you're migrating, erroneously, you set up your chart of account as current asset. No, so that would be an error. So you need to fix that, convert that to a fixed asset type. And then you have to redo again your registration. Okay, so be careful on that. That's why before you start any depreciation run, you have to make sure fixed asset accounts are set up, fixed asset types are set up. Misclassification of account that is not fixed asset during, which is an error. No? So assuming, for example, you initially recorded office expense when actually it's an office equipment, but then you posted office expense. Okay, so initially it was posted office expense. Then you found out that this is wrong. What you did? You go back to the posting entry, you edit that, change that to office equipment, okay? And then update. Now, question, will that update in fixed asset register? No. So if you stop that process there, then absolutely your register and your ledger mismatch already. So when you are editing an account to a fixed asset because of an error of a wrong previously entered account, you need to, again, every time you touch this fixed asset account, you need to go to the fixed asset register. And if it's not there because you're editing, you have to manually create that, so that you would match an item in your fixed asset register with your balance sheet. Number 3, at the early stage in my Xero years, I was having trouble of why I would see in my fixed asset reconciliation a separate group for my accumulated depreciation. So maybe some of you will have that. When you see an asset reconciliation, you know that this is correct when you are only seeing a group based on main accounts. Once you see another group here saying accumulated depreciation computer equipment as another group, then that is an error. Why? What is the error? Because your chart of account was set up wrong. Now, this is a good tip. Doing office equipment, so when you're setting up office equipment, make sure the spelling when you're creating accumulated depreciation must be the same. Because if you misspell this with an S, then my friends, you will have another group here. So make sure your contra account is spelled the same. No, I had to discover that only on my own during the early years. So that is one of those errors. So make sure your main account must be spelled correctly in your contra account. Manually registering asset without corresponding ledger entry. Obviously, this is wrong because, like, again, your register must match with your ledger. So if you are just adding without checking, then your register will be wrong, and then your depreciation entry will be wrong. Your accumulated depreciation will be wrong. Running a depreciation without registering a draft fixed asset. So before you hit a run depreciation, you need to do 2 things. One, you check that the draft must be empty, meaning all assets are being effectively and correctly registered. Number 2, you have to check your fixed asset reconciliation. If you are satisfied, it is only and only then you will click this button. Running the without completing the same thing like I said, no? So you have to do two things: register the draft, complete the fixed asset reconciliation first before running the depreciation. Deleting registered fixed asset without deleting the ledger entry or vice versa. Okay, so there's logic to that because you register again must match with your ledger. If the item is not in your ledger, it should not be in your register. If that item is not in your register, but it is in your ledger, you need to manually create because the controlling data is always the ledger. Your register must always follow the ledger, not the way around. Not the ledger follow the register wrong. It is the register follows what is in the ledger. Why? Because the ledger is where you record and post original transaction. And in the ledger, we assume that you have recorded that properly with the supporting documents. Okay. 8, editing entries to fixed asset account after initially approving or posting without manually adding fixed asset to the registering. Okay. Editing entries to fixed asset account after initially approving. Okay, so initially it was office expense. You posted it initially. Of course, fixed asset register will not detect that as a draft because it's not a fixed asset item. And then you realize it was wrong. So you reclassify, correct edit, and then reclassify the posting entry as office equipment. But then you did not fix your fixed asset register manually. Okay, because you're editing, so it will not be automatic. You need to manually add that in your register. Incorrect start depreciation date for each item. I give you an example here. When you are registering, you notice when I was doing this earlier, I will always copy this to this, okay? Most particularly true when you are doing actual days. Because otherwise, when your auditor will calculate this manually, of course, they will cross-foot and recalculate. They will test your calculation in fixed asset. They will create their own schedule and it will not match your schedule. The reason being is that you're doing actual date here, but then your depreciation start date is wrong. So be careful when you're doing actual days, depreciation start date must match with your purchase dates. Okay. When importing the date format to Excel, so these are part of the importation challenges. So when importing, there's a certain import date that you need to match. So this would create errors if you're not making sure you're following the date format. It will give you an error in the import. Changing the start date due to change order. Okay, I have encountered this one in the past and it is an experience you don't want to do. So if any of you was working with Xero and then the management decide that, it's best that you change the financial year end. So you don't want to have a calendar, you want a fiscal, which is, let's say, March 31. Now, you're an accountant, the management tell you, accountant, you have to change your year end. We have to change that, then be prepared for a major headache. Why? Because if you're going to change the start date, which you can, so in the settings, change start date. When you do this, change the start date because of something that either change of financial year end, what will happen? All your previous entry, except for the lock items before the lock date, will be reversed and become draft. So imagine you will have registered already 200 items of fixed asset and then you register, change the start date, all those 200 will be reversed and then goes to draft. So you will do a registration again one by one, not to mention the pain that you have to take in your fixed asset reconciliation. So just be careful. Yes, you can do it, but I'm just telling you, be prepared for the pain. It can be done, but I survived that. No? So these are the common errors. And I think the common major error that this is one big challenge in fixed asset, the importing, especially when you are in conversion. So my tips now finally would be, make sure you set up the fixed asset type in sub-items. You use the asset type. It's very beneficial. Why? Because, for example, different asset type under one main fixed asset class, you might have different depreciation policy. So then it's wise that you do fixed asset type. If you don't want to sublist or subgroup and you just, let's say, office equipment, you just have office equipment, then you still need to create a fixed asset type, office equipment only, one line. Fixed asset account must be spelled. Yes, this is what I was saying earlier. When you're setting up an asset account, the spelling for the main and the accumulated depreciation account must be exactly spelled the same. Always do a fixed asset reconciliation as part, of course, Okay, that's the purpose of fixed asset reconciliation, is for the accountant to look at the reconciliation before you are confident that your financial report is final. Set up standard depreciation policy per asset type for uniformity. Okay, so it is suggested that if you have different policy for each type, create a different one. Otherwise, you create the same depreciation policy. When I say depreciation policy, I'm talking about this example here, depreciation, that how you would depreciate the rate. This is the depreciation policy that I was talking about. Okay. Record disposal of fixed asset in Xero when management decide to physically dispose or sell the asset. I'll just give you very quickly how you would dispose your fixed asset. Okay, it's very easy. So I'll just go to fixed asset. Now, assuming you are going to sell an asset, okay, what you need to do not do anything in your ledger. When you are disposing, do not make any adjustment in your ledger. Do not do manual journal. Do not do anything. What you need to do is the disposal must be recorded under the fixed asset module. So let's say I would want to dispose Oliver, for example, this laptop. I will sell this. Okay, it's very simple. I would just have to go here and then click dispose. I would set here what was the date of disposal. What is the sales proceed? Okay, let's say, so the book value right now is 1.6. I will sell it 1,700, meaning I'm expecting a gain. I will put 1,700. The sales proceed, normally you should have an other account. You would have other income like gains or losses from disposal of asset, right? So if you have not created that, you have to create that account. For this illustration purposes, I would use maybe other revenue, right? But you can choose also other income or losses from disposal of asset. And then, of course, I would have to decide whether when I'm making a disposal entry, do I consider all depreciation up to this date or no depreciation at all? So then if there's no depreciation, it will reverse the entire depreciation, and then everything will be reclassified to the other income or to the other losses. Or otherwise, the depreciation only of the difference between your book value and the sales proceed will be recorded. So then I would set also that as the same date. Then I click summary. I would see now how the entry would look like. So this was the original cost, right? And then this was the accumulated depreciation since July to September. I would reverse the 50, which is part of my current month depreciation. And then depreciation to be posted because it is today, and this was not recorded yet. So sales proceed of 1.7, gain of disposal is this amount. Then I will click here and then see my journal. So my journal will tell me my asset account will be reversed at cost, historical cost. Reverse my contra account or cumulative depreciation on debit on asset amount. And then I will record everything as other income, this here. But what I would do, I would also use other revenue here. Because technically, okay, the amount that would reflect in your P&L must be this amount. So I would post this. Okay. Now let's see our P&L. So now you are this in disposal, and then let's see your P&L here. And then I would want to see also my balance sheet. It was computer, right? So then I would just look at my ledger here. Almost done. So balance sheet. See, I have reversed my asset. It's reversed already. When I would look at my other revenue account, so you are selling the asset on the selling price, and then it recognizes also the portion of your gain all together here, right? So that is the effect of the disposal. Another tip would be when changing a fixed asset starting that we recommend you run and publish these reports, you have a record. So record the asset to the register before changes. Okay, so we have a habit here that if, for example, we need to change the fixed asset. Remember, I told you earlier that it's a headache. Before I do anything and change the fixed asset date, I have to make sure I publish the reports first. Okay, I have to go here and then publish this. This means it's forever recorded. Even if my ledger will change, my report will change, it will be saved. So this is one way of saving a report for eternity, right? So even if the fixed asset would change, this report will not change because it's locked already. So why I'm doing this, so I have a reference forward. When I need to check again after I make changes, I have something to look back that this was the change if I have to manually reconcile between the changes of fixed asset date. 7, when moving to Xero from another software, we recommend to import fully the depreciated fixed asset in Xero using fully depreciated purchases. So again, this is one of those issues again in importing. If you are moving from one software to another, meaning you're converting, right? Or full conversion, or you're just cut-off conversion method, then you have to bring all those fixed asset list or register in your old system to Xero, okay? So that your depreciation schedule or your register would still be complete, as if you are carrying forward all those items in your system, except for those disposed, even if they are fully depreciated but are not. So I just remember now, there's one question. If the asset is fully depreciated, do I need to dispose? The answer is no. Okay? It's not necessarily. You can, but it's not necessarily. You can only dispose an asset if the asset is no longer used in your operation. Okay, so you cannot simply dispose because it's fully depreciated. You keep it in your balance sheet because it's still your asset. You only dispose when, number one, when you're actually selling. Number two, you are not already using it. Number three, it's a waste already and then you just throw away. That's how you use the disposal. But the fact that it's fully depreciated, is it necessary you need to dispose? No. You keep it in your register and your balance sheet. Okay?